I am only rich because I know when I am wrong. I have basically survived by recognizing my mistakes. George Soros, not one of my favorite people, but a man who must be respected in the stock market, in trading, in commodities, in all that he has done over all these years and amassing incredible amounts of wealth. And the lesson he gives us is so very important to always remember. He's not rich because he's never wrong. He survived by recognizing his mistakes. In fact, if you read Soros's quotes over and over again, he mentions things very much like that. How quickly we must recognize when the rules don't work and pull the plug and get ourselves out of situations, not being greedy. So let's jump into these charts. I'm also going to record after today's program, going to answer some of your questions and put out a special screencast for all of you who are subscribers. So if you're not a subscriber, go to chartingwealth.com, sign up, you'll get yourself on the mailing list, and you will get the Q&A that I'm going to try to do once every week, once every other week, something like that, but answering those questions that come in again and again and again, and going to try to help answer those things so that I don't have to end up sending out so many emails. If you haven't purchased our book, do so. Also see a lot of people signing up for TC2000. That is, of course, the stock charting service that we use, the app that we use here. It is phenomenal. It's what you see on the screen if you're watching the video. If you're listening to the audio, it's what I'm looking at as I talk to you. We appreciate everybody joining us via YouTube, via podcasts, and also, of course, via our email that we send out every day to our subscribers. And again, best way to join us, and that's how you're going to get the question and answers that we're going to be putting out. So what's going on in the markets? Everything up for the day now. Don't forget, big Fed meeting coming out tomorrow about whether or not there are going to be any rate hikes. How will that play on the market? Well, it will have a great deal to do with the market. A lot of caution as to people getting into things and trying to figure out what they are going to do. Let's talk about what happened throughout the course of the day today and sort of where our charts are for the week in relation to our indicators. Okay, what do we see going on? Well, we've now finished the second full day of a 5-day week. We see that the weekly candle is a nice large green up candle. The price percent oscillator is not crossed over yet going up. Again, we're in the summertime trading zone, typically less volume, more volatility, much harder to track as we talk about. And that's why we always bless the fall-winter trading zone, because it typically has much cleaner, because there's more volume and you have less likelihood of a bunch of back and forth jerking action. So what do we see going on? Price percent oscillator, not crossing over yet, but looks like it's getting close to that. And of course, the derivative oscillator losing energy. What could happen? Well, we could have a crossover at the end of the week or sooner if the markets soar, or if the Fed gives some news the markets don't like. We could see things pull away, and we could see the opportunity for much more down movement. We'll just wait and see what there is to see. We'll let these charts guide us. That's what we do. Things are in flux right now, and that's telling us to hold tight, don't be stupid, because we don't know what's going to happen. We're going to follow the trend. Now, what do we see going on the 2-day chart? Well, this latest 2-day candle represents, of course, for us Monday and Tuesday's movement, and we see price movement is above that 2-day candle. We've been able to connect 3 candles here, and we see the price percent oscillator heading up, derivative oscillator heading up on the S&P 500. Go to the 4-hour chart. What does that show us? Well, we had been sliding along for many, many days, and of course, over the course of Tuesday, things popped up quite significantly, bouncing off the red signal line and moving up. Does that portend what's going to happen tomorrow? Are markets going to soar? Maybe. Maybe it's a sucker play, and prices are being pushed up so that things can be shorted. Don't know. We're going to just wait and see what the market tells us, and we're going to use that information to our advantage. Let's go to QQQ. That's the Nasdaq 100. Again, second week of up movement, still much further away from crossing over than the S&P 500. So again, there's more downward pressure on the computer, the tech stocks, that is the Nasdaq 100, QQQ, that's what it represents. We go and we see that the derivative oscillator losing downward momentum, price percent oscillator heading up, green up candle on that weekly chart. Go to the now completed 2-day candle. It wasn't completed, of course, yesterday, just the first day of it, but we see up movement pushing higher on both the body of the candle and the wick as to that prior high candle back on the 2-day candle ending Wednesday the 12th of June. So again, up movement. Had that crossover the 2-day candle ending Friday the 14th of June. Derivative oscillator crossed over at the same time. Price percent oscillator, derivative oscillator gaining upward momentum heading up. We go to that 4-hour chart. What do we see there? Again, up in the morning and sort of topping off about the same area in the afternoon. We see the derivative oscillator gaining upward momentum, price percent oscillator heading up. Stronger in the morning, a little weaker in the afternoon. Again, wait and see what there is to see. That's where we are as far as stocks go. We'll see how the markets shake out tomorrow after that Fed meeting. Maybe we'll just sort of see how it continues to move throughout the course of the week. So let's look at TLT, 20-year bonds. What do we see them doing? Up for the day, 0.50%. Now remember, we're already in a confirmed up move on the weekly and the 2-day. Weekly's continuing to move up. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. Price, however, is just barely pushing above where it had been back on the last high week ending Friday the 7th of June. So again, continuing to move up. We look at the 2-day chart. What do we see there? We see things had been sliding sideways really for 2.5, well, no, I'm sorry. That's not 2.5, that's 4, 5, so about 10 days. Price had been sort of sliding sideways. And then what we see on this latest is, again, price movement moving above where the body had been on the prior up candle. That was Tuesday the 4th of June. And we see also that overall price, the spike on top, the wick as we call it, heading up, derivative oscillator gaining some upward, price percent oscillator heading up, derivative oscillator continuing to lose momentum on that 2-day chart. So again, that's looking nice. Now remember, our 2-day is in confirmed up movement, and now that that candle's finished drawing, it would be nice to be able to connect 3 candles. Getting close, but again, price movement is above the 2-day trend line and above the weekly. Don't like to see that 2-day, however, cutting below the weekly. That doesn't make for much value in that. But what's going on the 4-hour chart? Well, we had a crossover there in the morning. Not a super strong one. The derivative oscillator crossed over way before, not what we'd like to see. We like to see the price percent oscillator and the derivative oscillator crossing over at the same time. A lot of up movement in the morning, bit of a pairing back in the afternoon, but we did have a crossover on that 4-hour chart, a potential trigger. Hope that you followed that and made a decision. With that pullback, harder to do. And again, we'll see how things shake out with the Fed meeting over the course of the rest of this week. What actually happens to bonds? Stock market gets hammered. We could expect bonds to go down. Typically, the stock market is a place where money is when the stocks are doing well. Bonds are sort of where money flees to. We'll see what happens there. Don't know how that's going to shake out. Keep our eye on things. And then lastly, back to the weekly chart, and we go to gold. Gold, of course, again, an up week for gold, up for the day 0.51%. But we see, well, yeah, so far the body is higher, and even it appears the wick is right up there where it was last week, maybe a little bit higher. Looks like it is. Price percent oscillator heading up, derivative oscillator heading up. Of course, we had that nice crossover in gold back on the 7th of June, the week ending then, and gold continuing to move up. We go to the 2-day chart. What do we see there? 2-day chart continuing to move up. Nice movement. Price well above the weekly and the 2-day. And of course, we see that the price percent oscillator heading up, derivative oscillator, looks like it's losing a little bit of momentum. But again, price up nicely in gold. And we go to that 4-hour chart, and what do we see there? Well, of course, it is underneath still. We haven't had that crossover, but gold continues to try to track up. It did appear like it peaked out earlier back on Friday. No, it's maybe gotten just a little bit higher, a hair higher in the morning, bit of a pullback in the afternoon. So again, gold continues to move up quite nicely. Again, that 2-day chart continues to look all right. And the weekly chart continues to look all right for gold. Gold might, be giving us some forewarning as it continues to move up as to where things might go. Don't know. We're just going to continue to watch. And again, let the trends lead us where they are trends that we can follow. And of course, gold has continued to move up quite nicely after that weekly vertical crossover going up. Folks, that's where we are as we end the day on Tuesday. Go into Wednesday, waiting to see sort of the results of this Fed meeting. It can have an impact on us. Again, we're not letting the news guide us, not the way people are interpreting things. We're going to see how the charts interpret what the Fed does. Should the Federal Reserve have that much of an impact on the stock market? I don't think so. Not a big person into central banks. I sort of take the Jacksonian approach. However, that is the world we live in, and we're going to let these charts guide us. And remember, it's not guessing what the banks are going to do that you win by. It's letting the banks do what they're going to do, let the trends do what they're going to do, let the market do what it's going to do, and then use the rules to follow those patterns that are set up. Folks, that's where we are as we end the day on Tuesday and go into Wednesday. God bless you, my friends. All the best. If you've not purchased our book, please do so. You can see a link in the show notes. Whether you're listening to us on an iTunes through a podcast, you're watching us on YouTube, or from our email, you'll see a link in all the show notes that are attached in order to purchase the book. And of course, if you want to be a Patreon supporter, all sorts of great things for you there. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.